two sessions, we have discussed the complete theory part of admission of a partner. Now, in this session, I'm going to discuss with you all how to do a solution for admission of a partner. As I was discussing with you, there are different cases of goodwill, dear students. So based on those cases of goodwill, we are going to do the problems. So today in this class, we are going to solve certain problems, and that we are going to do from the textbook itself. So today's theme is to do the solution for the goodwill which is brought in cash. I told you whenever the new partner brings goodwill in cash, that amount of goodwill should be distributed among the partners, old partners, keep in mind, and in their sacrificing ratio. Then, whenever you are supposed to do the solution, we are going to maintain the dignity of the accounts. What are the accounts we have to draft? And what sequence, if we follow, we get the solution in a very good manner. Then always keep in mind, always you should start the solving of solution, problem I mean to say, by drafting the accounts. Always keep in mind that account number 1 should be your accumulated profit account. Account number 2, if there is any accumulated loss, then we'll keep accumulated loss account. Then 3, for a better understanding, we'll keep cash account, followed by goodwill account, then revaluation account, partners account, and the balance sheet. Then, first and the foremost, dear students, before you start posting, better mark the adjustments. Like, we'll be given with additional information, like stock is to be depreciated, land is to be appreciated. Like that, you go and mark the adjustments. And once your accounts are ready, you just start the postings. And when you make the posting, keep in mind that wherever we find an adjustment, that particular item, whether it is asset or liability, we are going to post in a column. So today's session, I'll be happy if you can look into your textbook on page number 238. We have a simple problem with goodwill brought in cash. Like question number 1, if you see, it's given the balance sheet of Ram and Rahim, who are sharing profit and losses in 2:3 ratio. And their balance sheet on 31st March 2019 was as under. If you look on the liability side, they gave you bills payable, trade creditors, general reserve, profit and loss account, and the capitals. Now here we are given with 2 accumulated profits. That is one general reserve and one is profit and loss account. Like that, if we see on the asset side, they gave bank, nothing but we'll assume it to be the cash only, debtors, stock, investment, furniture, and building. Then on 1st April, they admitted Mr. Peter for 1/5 share on following terms. What were the terms? New partner is Peter. Peter brings 40,000 for capital and 20,000 for goodwill in cash. He brings capital as well as goodwill. Then depreciate furniture by 5% and stock by 10%. So we'll go and mark adjustment on stock and furniture. Like that, appreciate the value of building. We'll mark on building and provide for bad debts at 5% on debtors. These are the simple and common adjustments which we see usually in the admission of a partner. Now, how we are going to draft the accounts? So you see here, I am drafting the accounts and the sequence of accounts, what I am going to follow. First, I am going to prepare general reserve account, about 4 lines, followed by profit and loss account, again about 4 lines. Then third, I'll make one cash account, 4 lines. Number 4, I'll make goodwill account. So I'll start with the drafting of accounts in the first page. You can see here, very simple and very logical way we are doing the solution. So 4 accounts are ready here. Remaining we are going to do in the next page. Simultaneously, you can do the accounts. Say for example, goodwill account. Now imagine the page is over. We'll go to the next page. Here, number 5, I'll make one revaluation account. This I'll keep little bit big. Then 6th, I'll make the partners capital account. This also little bit I'll keep. And then here I'll do the balance sheet. Here I'm doing the balance sheet as at 31st March 2019. So here I'm drafting the accounts. There are 3 partners. So keeping the scale in center, we can make into 2 sides, debit and credit. Amount column, amount column. Here, particulars, partner 1, partner 2, partner 3. Partner 1, 2 and 3. Similarly, here also we are going to draft the accounts. Debit side, credit side, you all know. Everywhere you have to write debit and credit. Everywhere. Debit, credit, debit, credit, debit, credit, debit, credit, debit, credit. And here is our balance sheet. Here is our balance sheet. Maybe about 7-8 lines. We'll draw balance sheet. And here we are maintaining one inner column, because whatever adjustments are there will be in the column. Now, everywhere particulars. Who are the partners? Ram, Rahim, and here we have Peter. Again, particulars, Ram, Rahim, and Peter. Students, if you solve the solution in this pattern, I assure that you will be happy that you are getting the accurate solution. So here, liabilities, rupees. Assets, rupees. Now, after the balance sheet here, this part we are going to utilize for doing our working notes. So everywhere you write particulars and rupees. I'm not writing because time is very short with me. So once the accounts are ready, first how we are going to solve the problem. Choice is yours. Either you take asset side approach or liabilities. I'll start with liabilities for you. What is the first liability given? Bills payable. I am also going to balance sheet and I am writing it as it is again. Bills payable. And the amount is 25,000. Just cut, copy, paste here. Then creditors. As it is, I am writing again creditors 50,000. Then we have general reserve, which is an accumulated profit. Being an accumulated profit, it shows credit balance. So we'll come to general reserve account, credit side, by balance brought down, and the amount is 20,000. Similarly, if you see, you have profit and loss account. Again, profit and loss account is an accumulated profit. So again, it will show you the credit balance. So I wrote on credit side, by balance brought down 10,000. Then partners capital. Capital is a personal account. Personal account shows credit balance. So again, in partners capital, by balance brought down, Ram is 50,000 and Rahim is having a balance of 30,000. So all the liabilities are posted. Now coming to asset. Bank. Bank is assumed to be like cash here. So cash will bring down to balance brought down and the amount is 10,000. Followed by debtors. It carries an adjustment here. So asset side will write debtors, but amount I am posting in inner column. Don't be in hurry to give the adjustments. Adjustments will give at a stretch, then stock. I'll leave some gap and I'll write stock. Is there any adjustment? Yes. Even on stock we have adjustment 30,000, followed by leaving some space, investment. On investment, I don't have any adjustment. So directly I'll write in amount column 20,000, followed by furniture. On furniture, I have some adjustment. So inner column 25,000, followed by building. Again, on building, I have some adjustment. So inner column, I'm writing 60,000. Like this, we have made the postings. Now we'll start with the adjustments. And to give the adjustments, I'm using different color pen. Peter should bring 40,000 capital. Who is bringing? Peter. We know Peter is a person who is a new partner and he is bringing capital. So the entry is cash account debit to Peter capital. So we debited cash account with Peter's capital 40,000. Now we'll go to partners capital by cash. And in Peter's column, he brought 40,000. That 40,000 we are filling. Then 20,000 he brought goodwill. So again, cash to goodwill. Cash to goodwill. And the amount of goodwill brought was 20,000. So in goodwill account, by cash, 20,000. Now here you need to be very careful because the so brought goodwill should be distributed among the old partners. Who are old partners? Ram and Rahim. So we'll do the working. I'm doing for you all working below the capital because of space. So here I'm writing old ratio. What is the old ratio? Ram is to Rahim. If you see Ram is to Rahim ratio, it was 2:3. Nothing but 2/5 and 3/5. Now I have to distribute goodwill. So goodwill we know it was 20,000 here. Now simple calculation. First divide 20,000 by 5. So if you divide, you get 5 4s are 20, 1, 2, 3. So 4 zeros. Nothing but quotient is 4,000. So Ram 4,000 into what is his share? 2. 8,000. Then if you see Rahim share 4,000 into 3. 4 3s are 12,000. So goodwill is to be distributed. What is the entry for distributing goodwill? Goodwill account debit to partners capital. So to Ram capital, to Rahim capital. Ram got 8,000, Rahim got 12,000. The second effect in the partners capital by goodwill. Ram share is 8,000, here 12,000. Now if you see, automatically your goodwill account is closed. Close it with 20,000 over. Now come to the next adjustment. The next adjustment says depreciate furniture by 5%. So you can calculate here depreciation on furniture. What is the amount of furniture we have? 25,000. 5%. 5 by 100. 0 cancel. 1250. So depreciation on furniture is 1250. So first we'll go to revaluation account to furniture. Decrease in value of asset is debited to revaluation. So 1250. Second, I'll come to furniture minus depreciation 1250. If I subtract, I get 23,750. So I'll post it 23,750. Like that, they told me to depreciate stock. So depreciation on stock. What is the value of stock we have? We have stock of 30,000. So 10%, zeros cancelled, 3,000. Now dear students, keep in mind stock is a current asset. For current asset, generally we use the word written off rather than depreciation. So again, revaluation debit side to stock 3,000. I'll go to stock. I'm using the word written off. You can use depreciation also, but written off will be more appropriate. So written off 3,000. If we subtract 3,000, we get 27,000. So post 20,000, 27,000 in outer column. Then appreciate building by 15%. So appreciation on buildings. What is the building value? 60,000 into 15%. 0 cancel. 16 5s are 90. So 15 6 are 90. 9,000 is the building appreciated. So I'll go to revaluation account by building. How much is building? 9,000. Then I'll add appreciation 9,000. 69,000 here. Then they told create provision for bad debts at 5%. So RBD or PBD you can write on datas 40,000 into 5%. Same what adjustments we have done in first year. So 2,000. So I'll go to revaluation account to RBD. I got 2,000. Subtract from datas minus RBD amount is 2,000. Again I'll subtract. I'll get 38,000. And this 38,000 I am transferring to outer column. So all my postings are done. All my postings are done. Now in sequence, we'll close one account. So the first account is general reserve, which is an accumulated profit. Always the accumulated profit shall be distributed among partners, old partners. So we'll do the distribution. Here, general reserve. How much is general reserve? 20,000. Now this 20,000, first I'll divide by 5. 5 4s are 20. So 4,000. Then I'll do Ram share. 4,000 into 2. I get 8,000. Then Rahim. I do 4,000 into 3. I get 12,000. Like that, we'll follow the working notes so that it will be easy. So we'll go to general reserve account, to Ram capital, to Rahim capital. Ram got a share of 8,000 and Rahim got share of 12,000. So second effect in partners capital by general reserve 8,000 and 12,000. So even the general reserve account is closed with 20,000. Then we have profit and loss account, which is again an accumulated profit, 10,000. Again, this 10,000 I'll divide by 5. 5 2s are 10. So 2,000. Again, I'll do the share of Ram. 2,000 into 2, 4,000. Rahim, 2,000 into 3, it is 6,000. So again, I'll go to profit and loss, to Ram capital, to Rahim capital. So Ram gets a share of 4,000 and he gets a share of 6,000. So this also is closed. So 4, 6, 10,000 balanced, 10,000 balanced. Second effect, again in partners capital, by profit and loss account, 4,000, 6,000. Then third account is cash account here. Cash account should be balanced. Accumulated profits was distributed. Cash account should be balanced. In the sense, we want to know how much is the balance of cash after the admission of the new partner. So debit side, if you see 40 plus 20, 60 plus 10, 70. So we have new balance of cash 70,000. So this will be returned on the credit side by balance carried down. We have 70,000. Now let us close cash account with 70,000. 70,000. And this will bring down to balance brought down 70,000. This is the new cash. So cash in the balance sheet will put cash 70,000. Then goodwill. Goodwill is already balanced because it is distributed. So no need to worry. Now we have revaluation account. Again, revaluation account is a nominal account. So whatever difference we get, that will represent either profit or loss, which will be distributed among the partners. So see here, I am doing here the working for revaluation account. So you can see revaluation. Here I am writing debit figures. Debit 1250, 3,000 and 2,000. The total is 6,250. Now I'll do credit side. Credit 9,000. So 9,000 I have. Now if I see here, credit is more 9,000 minus debit 6,250. Balance is 2,750, which is profit. Again, this 2,750, first I'll try to find the quotient dividing by 5. So 5 5s are 25, 2, 5. Again, 5 5s are 25, 0, 1, 0 left, 550 we got. Again, Ram. You know, 550 into 2, 1100. Then Rahim. 550 into 3, 1650. This is the profit here. This is the profit. So 2, 2. To Ram capital, to Rahim capital. Now if we see, we get 1100, 1650. This will transfer by revaluation. 1100, 1650. Even this got closed. Now we'll balance the partner's capital. If you balance the capital, you will get two balance carried down. So 50, 58, 64, 64, 68, 68 plus 1100, 68,900, 30, 42, 42, 54, 54, 60, 61,650, and here we get 40,000. This is the new partner's capital which we got. 50,000, 66, 70, 71,100. Sorry, dear. Then 61, 650, 30, 40, 30,000 plus 12, 42, 42, 54, 60, 61. 61, 100, and then we get 40,000. So we'll balance the partner's capital. This will be in the partner's capital. So Ram capital 71, 100, Rahim capital and Peter capital. So Rahim 61, 100 and 40,000. Like this, we are going to close the accounts and we'll get the balance sheet answer. If you tally the balance sheet, you can see the total will be your 2,47,750 rupees balance sheet. 2,47,750, which you can do in the working as asset and liability. You will get the answer. Like this, you can do the 20 marks problem in a very easy manner. And here we are going to write the totals, that is 71, 100, 61, 100, 40,000. Then if you want, it's better, bring down the balance here. By balance 71, 100 and 40,000. Like this, we can do the problem and we can get the workings also. So you can see here is the solution for you all on the blackboard. And similarly, dear, based on the same pattern, you have different problems like you have different problems, problem number 2, problem number 4 and all, which you can do as your revision following this pattern. General reserve account, profit and loss account, it may or may not come, cash account, goodwill account, then your revaluation account, then your partner's capital account. Follow this sequence always. Then your balance sheet and all your working notes. Like this, if we do the solution, you will get an accurate answer and this will guide you, help you to get the total 20 out of 20, dear students. In the next session, I am going to teach you where the goodwill is valued.